$438 billion in Q1. You read that top-line number and assume the glory days are back.
Because they are. AI is driving mega deals, and someone just paid $29 billion for Restaurant Depot. $29 billion for bulk mayonnaise and sheet pans.
Jetro prints cash, Nate. But ignore the top line. Traditional private equity is actually quietly sweating a massive sales slump.
You always ruin the parade.
I just read the footnotes. Wait until you see what all this AI hype is actually hiding. The rundown by.
And just like that, Goldman officially swallowed Innovator Capital Management. The defined outcome ETF pioneer is off the board.
I actually read the closing docs on this one. It makes perfect sense. Banking M&A is finally hitting that throttle up moment analysts promised us. The regulatory clouds are supposedly parting.
Supposedly, but Goldman buying an ETF factory is just smart asset gathering.
Speaking of asset gathering, did you see Soluna Holdings dropping $53 million for the Briscoe Wind Farm in Texas? 150 megawatts of pure green energy.
Oh, I love this deal. Pure vertical integration. You want to run green data centers? Own the actual wind. It is the ultimate hedge against grid pricing.
Wait, really? You love it? $53 million for a wind farm just to power your own servers. That is a massive capital misallocation. They are a tech company, not a utility. Stick to your core competency.
Classic tech journalist take. You cannot decouple AI data centers from power generation anymore, Maya. They are the exact same business now.
I will believe it when I see the margin improvement in the next earnings report. Right now, it just looks like an expensive ESG flex.
Fair enough. Moving on, Apollo just handed off Sapphire Gas Solutions to Antin Infrastructure Partners.
Compressed natural gas changing hands. Nothing too flashy, just solid infrastructure churn. Same with Lupin Limited buying Vizu Pharma to get a bigger footprint in European eye care.
Eye care and natural gas, the unsexy deals that keep the lights on and the associates fed.
Okay, I have a juicy one for you. Whispers out of APAC say Grab is about to write a $600 million check for Food Panda's Taiwan business.
$600 million? Oh, come on. For food delivery in this margin environment, that is incredibly steep.
Right? But Grab wants that monopoly pricing power. We will see if the regulators actually let them chew on it. Keep an eye on the ticker tomorrow too. The Rival and RTB Digital merger is finally debuting on the NASDAQ.
Ticker RTB. But honestly, all these smaller deals are just the appetizer.
Exactly. Because the real story right now is the Q1 numbers. $438 billion. Mega deals are back, AI is writing the checks, and private equity is quietly having a panic attack.
Oh, the private equity squeeze is my favorite kind of drama. We need to talk about Leonard Green and that massive $29 billion Jetro deal. The big one. $438 billion in a single quarter. I had to refresh my terminal 3 times this morning just to make sure the data feed wasn't glitching.
It isn't a glitch. It is a legitimate 5-year high. But if you actually look at the distribution of that capital, it's incredibly top-heavy. This isn't a rising tide lifting all boats. This is a few massive mega yachts displacing all the water.
Classic Maya. We finally get a blockbuster quarter for M&A, and you immediately look for the leak in the hull.
Somebody has to look past the headline numbers, Nate. 4 of the 6 largest mega deals in Q1 were purely AI-driven. Analysts are literally calling AI the undisputed kingmaker right now. It's completely masking a ton of underlying weakness in the broader private equity market.
Okay, sure, the tech multiples are heavily juiced, but the single biggest anchor transaction of the quarter has absolutely nothing to do with artificial intelligence, unless someone invented a new generative AI for bulk buying frozen mozzarella.
Right. Jetro Restaurant Depot, over $29 billion.
Over $29 billion. Leonard Green and Partners are involved, and honestly, I love this deal. In a market where everyone is chasing software multiples, buying the warehouse where local diners buy their napkins, and 5-gallon tubs of mayonnaise is just a beautiful, boring cash flow masterclass.
I am sorry, but $29 billion is entirely absurd.
Oh, come on, it's bulletproof.
It is not bulletproof. Look at what private equity is actually doing right now. Behind closed doors, PE firms are quietly sweating out a massive sales slump. They can't exit their traditional portfolio companies because valuations are completely fractured by global conflicts and tech disruption. Paying $29 billion for a wholesale restaurant supplier feels like a desperate flight to safety. They're overpaying for boredom.
They're paying a premium for certainty. As a recovering banker, I can tell you exactly what the pitch deck looked like. You cannot disrupt local food service logistics with a large language model. People still need to eat. Leonard Green knows exactly what they're doing here.
Certainty does not justify that multiple. I read the footnotes on their regional expansion costs. The operating margins are incredibly tight. If inflation ticks up even 0.25% on their supply chain, that $29 billion valuation starts looking like a very heavy anchor to drag around.
Totally disagree. I think it's the smartest non-tech play we've seen in 2 years. It balances out the sheer insanity of the AI premiums driving the rest of that $438 billion.
We will see how smart it looks when the debt matures. But speaking of questionable premiums, my inbox is currently lighting up with rumors out of APAC.
Are you talking about the food panda whispers?
Exactly. Grab is supposedly closing in on a $600 million acquisition of Food Panda's Taiwan business.
Now, that is a deal with some serious regulatory hair on it. Hold that thought while we pull up the market share data. Voices. I keep seeing this quote everywhere this morning. Industry watchers are calling AI the undisputed kingmaker right now. 4 of the 6 largest mega deals in Q1 were AI-driven.
Undisputed kingmaker. I love when analysts write like they're scripting Game of Thrones.
Hey, it works. $438 billion in Q1 volume doesn't lie.
The volume doesn't lie, but the narrative absolutely does. Yes, AI is loud. But what was the actual anchor deal of the quarter? Jetro Restaurant Depot.
$29 billion of wholesale bulk food.
Exactly. Leonard Green and Partners moving frozen chicken and industrial mayonnaise. Not exactly generative AI.
Fair, but you're ignoring the secondary effect. The whispers I'm hearing from my old private equity buddies, they're quietly sweating a massive sales slump. AI isn't just creating deals, it's actively destroying traditional portfolio valuations.
Oh, the stress fractures are definitely showing. You have AI disruption on one side and global conflicts on the other. Traditional PE models are breaking down when they try to exit.
Which brings me to the other quote making the rounds. Banking and capital markets are having a quote-unquote throttle up moment because regulatory uncertainties are finally easing.
Easing? Are they reading the same filings we are? Tell that to the APAC regulators. Grab is supposedly closing in on a $600 million buyout of Food Panda's Taiwan business. The antitrust scrutiny on that is going to be brutal.
600 million? I thought Food Panda was dead in the water.
Not dead, just waiting for a very expensive life raft.
Well, if regulators in the US and Europe are actually loosening up, maybe those cross-border deals are finally unfreezing.
We'll find out tomorrow. US buyers are definitely looking at Europe for value right now, and I'm expecting a massive wave of cross-border filings to hit the wire by morning.
Speaking of tomorrow, we also need to track RTB Digital. They're debuting on the NASDAQ under the ticker RTB after that RIVEL merger officially clears. Spill the tea. You cannot tell me $600 million for Food Panda's Taiwan unit makes sense right now. Grab is out of their minds.
Wait, why? Taiwan is incredibly dense, high order frequency. If you want to own APAC delivery, you need that footprint.
Sure, but $600 million? Delivery margins are thinner than a CVS receipt. They are just buying market share to say they did it. Classic banker-driven empire building. I should know. I used to pitch this exact strategy.
I disagree. Look past the gross margins. It is not just about sending noodles on scooters anymore. It is localized logistics data. And honestly, Grab actually has the cash to burn right now.
Fine, but while Grab is throwing around $500 million, my old private equity buddies are quietly hyperventilating into paper bags.
Oh, I have seen the footnotes on the Q1 numbers. Everyone is cheering that $438 billion top line, but underneath, complete stress fractures.
Exactly. You have commentators calling AI the undisputed kingmaker, driving all the mega deals, but traditional PE portfolios are bleeding. They're staring at their legacy assets and realizing AI just made half their thesis obsolete overnight. Add in the global conflict supply chain mess, and nobody wants to buy their boring companies.
The exit windows are completely jammed, though I did see one analyst claim the banking M&A sector is experiencing a quote-unquote throttle-up moment as regulatory heat cools.
Throttle up. Oh, come on. Who writes this stuff?
Probably a second-year associate who has not slept since Tuesday.
Definitely. Speaking of people not sleeping, tomorrow morning is going to be rough for the compliance desks.
Oh, right. The RIVYL and RTB digital merger finally hits the Nasdaq tomorrow under ticker RTB. And honestly, with European dealmakers currently smoking the US market on valuations, expect a flood of cross-border filings to hit the wire right next to it. US buyers are going bargain hunting overseas, and we have the data to prove it. Tomorrow's radar.
My phone is blowing up about Grab. Whispers say $600 million to take Food Panda's Taiwan business.
I'll believe that when the ink is dry. Tomorrow, I'm entirely focused on the RTB digital debut.
Rival and RTB? You actually care about that ticker?
Yes, they start trading under RTB tomorrow on the Nasdaq, but the real volume tomorrow will be cross-border filings.
Because Europe is suddenly a bargain bin for US buyers.
Not a bargain bin. European dealmakers are actively outperforming. The regulatory wire is going to be flooded by 8 a.m.
I think US buyers are just running away from the private equity mess here. PE firms are quietly sweating a massive sales slump. They can't figure out how to value traditional portfolios when AI is creating these huge stress fractures.
Oh, come on. AI isn't creating stress fractures. It's a convenient excuse PE firms use when they overpaid 3 years ago and can't exit now. They just blame the algorithm.
Brutal. But if you're holding a legacy portfolio right now, you're terrified.
Terrified enough to read the footnotes tomorrow morning. We'll see exactly who is dumping what.